and welcome. You're tuning into Market Fatafat with me, Ankita Saxena, and with me, Kanishka Sarkar. In the next half an hour, we'll take you through all the top buzzers in the trading session and why they are buzzing on the back of news flow or on the back of technicals. But first up, let's take check of how the market is shaping up at this juncture. It's a quiet day coming in today. If you look at the Nifty, that is holding on to the psychological levels of 26,000 as of now, but very, very flat in the trading session. As far as Nifty Bank is concerned, that is clearly an outperformer because that is trading up more than 0.5%. In fact, it is managing to hold on to those gains of 0.6% consistently. So 59,233 is where Nifty Bank is perched at. If you look at the broader markets then, mid-cap and small-cap, those are the ones that are reeling under selling pressure today. In the red, mid-cap trading with cuts of 0.1% and small-caps also trading down 0.5%. So small-caps are the net underperformer in today's trading session. Let's talk about the sectors then. Nifty IT is seeing a reversal. We do see gains of 1.1% coming in on Nifty IT. We have Tech M, that's the top Nifty gainer as well. That's trading up 3%. Mphasis, Wipro, Persistent System, LTI Mindtree in that pecking order are trading with gains of 1.5%. The PSU banking pack is another pack that is doing very well for itself within the banking pack. PSU names like Canara Bank, Bank of India, Indian Bank, UCO Bank, all of these are trading upwards of 0.5%. So the PSU basket is also doing well for itself. But what's losing is the realty pack. Media and realty are the top sectoral losers, with realty seeing a sharp knock of almost 1% in trade, with Anantraj, Brigade, Prestige, Oberoi Realty, Godrej, all of them trading with cuts of 2% or thereabouts. Besides that, we also have a couple of other names like JSW Steel, BEL, Max Healthcare, Power Grid, M&M. All of these are declining in trade with cuts of more than 1.5%. And the advanced decline ratio is very, very clearly tilted in the favor of declines right now. And India VIX, though, has seen a bit of a cool off there. It has seen, in fact, a cool off of 1.7%. 12.82 is where India VIX currently stands at. But let's get on board our techie for the day, Jigar Patel, Senior Manager, Technical Research Analyst, Anand Rathi Shares and Stockbrokers, who's now joining us on the technicals. And let's get going with the show then.
Absolutely. So let's start with the top buzzer today. That is the IT pack. Now this comes as Motilal Oswal has come out with a big note. Now it has turned bullish on the India's IT sector. That's almost after 4 years of underperformance that the sector has seen. It has highlighted that IT's share in Nifty profits had stayed nearly steady at 15%, but index weight, that has crashed to a decade low of 10%, making valuations extremely attractive. The brokerage believes that the sector has bottomed out and the next big AI-led spending cycle will start kicking in from mid-2026, with a full growth revival visible by FY28. They've upgraded earnings estimates, ratings and target multiples by nearly 20% rolling forward to FY28 earnings. Top picks for the next AI wave, Hexaware and Coforge in the mid-tier, HCL Tech and Tech Mahindra among large caps. That's the word coming from Motilal Oswal. Stock-specific upgrades as well. Mphasis upgraded to buy with a target price of 2,150. Mphasis upgraded on the back of strong deal wins with the new target price at 4,100 rupees. Zensar Tech also upgraded to buy, target price at 1,040. And even Wipro is seen an upgrade from sell to neutral. Now, MSOSL's call is that risks are now skewed to the upside for the entire IT pack. So yes, the entire IT pack is in focus and today, in fact, is leading the charts as far as the Nifty is concerned.
Absolutely. Moving on, then coming to you, Jigar, the IT pack is buzzing on in the trade on the back of those upgrades coming in from Motilal Oswal. And Mphasis is one of the stocks that is seeing an upgrade from the brokerage. But on the charts, what do you see for Mphasis? What are the levels to watch out for?
Very good afternoon, both of you. See, overall, the kind of chart Mphasis is trying to make on weekly scale. Currently, since last almost 7 to 8 weeks, the average, which is around 200 period, is slightly making, the angle is slightly turning onto the upward. But overall, in previous week, we saw a classic hammer, a textbook hammer on weekly chart. Overall, the indicators are also turning up on upside. So overall, the structure is turning bullish, and overall, since last 3-4 days also, the traction is seen from bottom of around 2725, and overall current price action is around 2800. So I would recommend it buy at current levels. The target is seen near 2900 approximately. and the stop loss would be somewhere near 2730 on daily closing basis.
All right, so those are the levels to watch out on Emphasis, but let's move on to the next counter, which is in focus today. And in fact, that saw a sharp knock of almost 9% in the trading session, and that's HAL. Now, this after the Tejas fighter jet manufactured by Indian PSU company crashed during a Dubai air show on Friday, causing a death of an IAF officer. Now, the company has come out with a clarification. The company says that the incident during the aerial display was an isolated occurrence arising out of an exceptional circumstance, and there is no impact on the business operations, the financial performance, or the future deliveries. They also said that extending full support cooperation to the agencies conducting investigations. And now remember that this is the second crash in 20 months in which HAL manufactured aircraft was involved. Prior to this, it happened in the Dubai air show in Jaisalmer, Rajasthan. Tejas met with a crash in March 2024. On the back of that, investors are not, are maintaining a cautious stance despite the clarification coming in from the company, and the stock is declining in trade with cuts of 3%.
That's right. So that's HAL declining more than 3% right now. But Jigar, let me come to you. You've picked out Escorts for us. It's trading well above 1% right now at the 3,659 level. But from here on, where do you see the stock headed?
See, again, even in Escorts, the current price action is sustaining about 200-day exponential as well as simple moving average. But overall, since last 3-4 trading sessions, we have been witnessing this consolidation between 3640 on higher end and on lower end 3540, approximate 100 point zone. And currently, we are, the kind of breakout is seen above last 2 days high, and consistently price action is sustaining above it. And even on RSI, if we look at RSI, continuously trading above 50, which is a good sign. And overall, the traction is seen, on upside until 3800 would be the target in Escorts. And in terms of stop loss, one can keep a stop loss of around 3550 on daily closing basis.
All right, so that's Escorts Kubota. But let's move on to the newsmakers of the day. That's Zomato and Swiggy. They are both in focus today as they are reacting to the rollout of India's new labour code, which is a reform that now mandates platform companies to contribute to a social security fund for gig and delivery workers. The stocks initially fell up to 2% in early trade, but they have quickly recovered as brokerages have signaled that the long-term financial impact will be manageable. Under the new rules, aggregators must contribute about 1 to 2% of their annual revenue, capped at 5% of the payouts to gig workers. This works out to roughly 1.5 to 2.5 rupees per order as per brokerages, and they estimate a 4 to 10% impact on adjusted EBITDA for food delivery and quick commerce operations. So a minor increase in delivery fees for consumers also cannot be ruled out. That's the word coming from brokerages. But the key takeaway is that the cost burden is expected to be shared between platforms, workers and customers. That would limit margin pressure. Brokerages like Bernstein, they estimate only about a 25 to 70 basis points hit to EBITDA margins, while both Zomato and Swiggy have clarified that they do not expect any material long-term impact. So overall, the market sees this as a near-term sentiment overhang rather than a structural risk. That's the word coming from brokerages, and both of the stocks have turned to positive, are seeing positive sentiment right now.
All right, so that's Eternal and Swiggy on the back of that labour law. But let's move to the next counter that is in focus, and that is ACC on the back of a brokerage note by MK that has set, they've cut the target price sharply for the company to 1,600 from an earlier 2,280 rupees, which is a downside potential of 30%. Now they've downgraded the ACC to sell due to weak margin trends and slower capex execution, and the valuation has also been revised to 7 times EV to EBITDA from 9 times given deteriorating fundamentals. On the back of this downgrade, ACC stock is down and out. In fact, it has recovered a bit from the day's lowest point, but nonetheless in the red, trading with cuts of 0.4%.
That's right. So that's ACC on the back of that note from MK. But moving on, Jigar, you've picked out TCS for us. In fact, this particular year, that is in 2025, the stock has declined nearly 23%. But now that valuations are looking better, what kind of an upside are you expecting?
See, if we look at TCS, TCS is currently at a very interesting juncture because if we see the COVID low, which was somewhere near approximately 1900, 1800 levels, and since then we saw a rally till 4500 till September 2024. So since then we have been witnessing a massive correction, and currently price action is exactly near 50% of retracement, and overall since last 3-4 days or Even before that, we have been witnessing multiple bottoms near this particular zone around 3000 till 2900, and overall bullish divergence is also seen on TCS along with trendline breakout. So I would recommend a buy. At least the view should be around 2 to 3 weeks. The target would be around 3,350 approximately, and overall the stop loss would be placed below 3,050 on a daily closing basis.
All right, moving on to the next counter that is in focus, and that is Dilip Biltcon, that was doing well in the trading session as it has won an order. It has emerged as an L1 bidder for two tenders that are worth 5,000 crore rupees that have been floated by NALCO. And on the back of this big order win, Dilip Biltcon is in focus. Now, as you can see in the charts, it has recovered very sharply from the day's lowest point. Currently, is trading with gains of 1.8%, almost 2% in the trading session.
That's right. So that's Dilip Biltcon for you. But Jigar, coming to you, you've picked out Tech Mahindra for us. It's the top Nifty gainer today. Do you see more upside coming for this stock? What's the target that you're looking at?
See, again, even in Tech Mahindra, the structure is slightly similar, but overall, Tech Mahindra is doing well compared to the TCS. Overall, since last 3-4 weeks, again, there was a consolidation between 1500 till 1400 zone, and currently we are above the breakout level. Even the trend line is breached, and overall on RSI, again, 40 levels are sustained and currently above 50 levels. So there is a chance that we might see 1600 as a target. So buy would be the recommendation in Tech Mahindra, and overall stop loss would be placed below 1450 on daily closing basis.
All right, moving on then. The Indian Railways is eyeing a cement-style freight policy overhaul for the auto and the steel sector and is planning to roll out a uniform freight regime for the auto and the steel sectors. The initiatives aim to bring a long-term policy stability and cost predictability. The ministry also understands that the freight policy simplification will help to lift rail's model revenue share as well. My colleague Sameer Dixit is joining us with the details.
The Railway Ministry is looking to replicate the cement freight policy for the auto as well as for the steel sector. Recently, we have seen that Railways has introduced a new freight policy for the cement sector, where the freight rate has been rationalized to just 90 paisa per tonnage per kilometer. So a uniformity has been provided. And similar kind of uniformity, Railway is looking to bring for the auto as well as for the steel sector. Currently, if you see, when it comes to the freight charges for the auto sector, it is basically the wagons and the distance travel. So wagon multiplied by distance, that is a formula that is applicable. For the steel sector, it is basically based on the tonnage and the distance travel. But now Railways is looking to bring a uniform freight rate for the auto sector. For example, it might be less than rupees 5 per kilometer, and it will be for the wagons likely a full rake multiplied by less than rupees 5 per kilometer. That could be the formula that Railway is looking at. That is very much it will be rationalized for the auto sector, and basically it will be largely for a rake that is traveling to X number of distance. Similarly, for the steel sector, Railway is looking to bring a uniform rate that will be largely based upon gross tonnage per kilometer. So that kind of formula is Railway is looking at. Currently, if you see in terms of the percentage for the financial year 23-24, the auto sector freight movement through Railways was just around 24 to 25%. For example, total 50 lakh car has been transported, just 12 to 13 lakh was transported through Railways. But now Railways is looking to increase the percentage in coming years. Larger vision that Railways is having to have a 20-30 million ton of freight movement by year 2030, and for the same, the freight policy is being rationalized.
All right, so that's the update coming from the railway sector. But on that note, we'll slip into a very short break. Be right back with more buzzes on the other side. Hi there, welcome back to ET. Now you're watching Market Fatafat with me, Kanishka Sarkar and Ankita Saxena. Let's get back to discussing all the top buzzes in trade today. And now let's put the spotlight on NBCC, which has received multiple orders worth 115 crore rupees, and the stock has jumped nearly 5% after the company announced these fresh wave of order wins. The first major project is a 29 crore rupees PMC assignment for building a new composite regional center campus in Madurai. That's awarded by the National Institute of Empowerment Persons with Disabilities. The second order is a 42 crore rupees order for planning, designing and executing the International Potato Center project in Agra. That's along with related works for the National Horticulture Board. And adding to that momentum, NBCC has also secured a 45 crore rupees order from Canara Bank to construct a new regional and circle office building in Ranchi. So on the back of these orders worth 115 crore rupees, these three new orders, they are contributing to the gains for NBCC. It's up by 4% right now, 4.5% nearly. So yes, that's keeping the momentum on the upside for NBCC.
All right, let's get on board Jigar as well now on the technicals. Jigar, you have picked out NBCC for us. NBCC, we just heard the fundamentals, why that stock is up in a way almost 4% in the trading session. On the technicals, what are the levels to watch out for?
See, in NBCC also slight consolidation was seen since 3 to 4 days, but overall there is a trendline breakout is also seen on 14th November, and we tested that particular trend line, and today we reversed from exactly that particular level. The level was around 113, 114, and overall RSI is also placed above 50. So we expect continue upside till at least 125, 126, which would be our target, and stop loss can be kept below 112 on daily closing basis. So the bullish tone would continue for few more sessions in NBCC.
All right, moving on from NBCC on the charts to Team Lease, that is on fire after India implements the 4 new labour codes, ushering in sweeping reforms that guarantee minimum wages, timely pay, social security, gender parity and strong safety norms for millions of workers. Now, the overall expands protections across MSMEs, contract labours and hazardous sectors. And on the back of that, Team Lease is firing on all cylinders.
That's right. So Team Lease on fire, up more than 11% right now. But Jigar picked out Tech Mahindra Bank for us. Tell us, what are the levels to watch out for? If you look at the past 6 months chart, it's gone up just about 0.5%. So from here on, where do you see the momentum going to?
See, again in Kotak Bank, we saw very good correction from the levels of approximately 2260 till 2050, but overall the chart is placed near 61.8 retracement, and currently we are at double bottom structure is also seen on daily chart along with some divergence on hourly chart. So we are expecting at least upside till 2200 in Kotak Bank, and the stop loss would be kept below 2050 on daily closing basis.
Right, so that was the last talk for the day, Jigar. Thank you so much for joining us on Fatafat and giving all the picks. But with that, it's time for us to wrap up this edition of Market Fatafat. Kanishka and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Closing trades is coming up next.